I have made up some videos about journal entries in the book of unknown Messrs and Company because we all know journal entry is the base of transaction recording in accountancy. So journal is the prime book of accountancy which is essential to make for accurate picture to be drawn up. So first problem I have solved, that is brought goods with rupees 500 for cash from X. It means is that brought goods. Then I purchase the goods or goods come in my business, because business is a console and we have to consider that accordingly business what is comes and what is out. Before this, I would like to tell you that most of the transaction is related with cash, but some transaction is related with credit. So if you finalize that one item has to be debit or credit in cash, so second items to be debited or credited will be easy to be understand if you minutely check what kind of accounts you are going to select. So I proceed. Purchase account debit or goods account debit to cash account, being cash purchased 500 rupees. Same amount is debited and same amount is credited. Because we know in double entry system there is twofold effect. First will be debit, second will be credit. Second problem is that cash sold, being cash sold, because in business cash sold transaction took place. So the recording is cash account debit to sales account or goods account, because cash is coming, cash is debit, and goods is out, so goods are credit or sell is credit. When goods out we say sell, when goods comes in it is called purchase. Being cash sold, it is the problem of being cash sold. So solution is that cash account debit to sales account or goods account, amount 400. Second type of problem is that being purchased on credit. I said you that some transaction will be related with credit transaction. So what is the problem? Purchase on credit. So purchase will be debit or goods will be debit with the sense of some person's ability to be purchased. Who purchased? B purchased. So we have to say to B account, because B has purchased. So B is giver. B is giver. And double entry system golden rule says that debit the receiver, credit the giver. So second item I did it in credit. Amount is 600. Now fourth problem is that being sales to A on credit. Problem is saying that being sales to A on credit. So it is a credit transaction. Receiver will be debited. A is receiver. So A's account is debit and sales is from my business, and sales is always credit. So it is to sales account. 700 rupees. Both side, debit side and credit side, 700 rupees. Then another problem is being brought of office furniture on credit to B. Being brought furniture, office furniture on credit to B. B is giving me, B is purchasing office furniture from me. So B is from B we are purchasing office furniture. So B is giver. So office furniture account debit to B account 1000 rupees. Then another transaction is office furniture account debit to cash account, because office furniture is coming in my business and cash is out in my business. So it is 1000 rupees. Office furniture, old office furniture is debit to cash account. Old office furniture is coming and cash is out. So it is 100 rupees. Then again cash account debit, cash is coming to A's account. From A on credit we are taking cash rupees 400 rupees. Then another example is X account debit to cash account. Cash is going to A's account worth rupees 300 rupees. It is clear. Then the 10th transaction is being paid to bank from office on cash. So bank account debit to office cash account 500 rupees, because we are taking checks in respect of mutualization of office cash. Then again rent account debit to cash account. Rent is paid by cash. So rent is debit because rent is nominal account. It is debit, and cash is credit because cash is paid off. Office stationery account, which is very vital to be known, that we sometimes expense office stationery. So office stationery is an expense, it is a nominal account. So office stationery account debit to cash account 15 rupees. Then another example is office stationery account debit to Vasi and Company, because office furniture account is coming in my business and Vasi and Company is giving. So it is office stationery account debit to Vasi account worth amount 50 rupees. Then again 14th transaction is saying cash account debit, because cash is coming to interest on investment. From interest on investment rupees 200 rupees. Then again salary account is debit 150 rupees to cash account. We are paying salary. So salary is a nominal account. Salary will be debited because we are paying cash rupees 150. Now I have made some notes last in to finalize that what is the impact of this all transaction in a nutshell. This is a random journal entry for business, not cash ledger, not credit ledger, neither capital account is affected. So it is incomplete account. Thanks all, because cash transaction will take place and it will finalize the whole summary of business whole in soul. Another is credit transaction. But sometimes accordingly place people ideas and statutory government legislation, we have to make problems as it is given to us. Thanks all.